Hey folks, welcome to the channel. This is Jason. I am having a little bit of trouble with YouTube's app today, so let me know if you guys can hear me, and if you can't, then I need to figure out what's going on. But somebody let me know in the comments there. All right. Is everyone able to hear? Okay, just a second here. You said there's an echo there? All right, how about now? Is that better? Okay. All right, excellent, guys. I guess we have a lot to talk about today with everything going on in the market, and I just wanted to do kind of an impromptu live session here to to let you guys ask some questions, and we can talk about what's going on. And I want to let you guys know, of course, that the super chat features are on if you guys feel so inclined. If you don't worry about it. I'm here to answer questions, though. A little disclosure up front, of course. I am a financial planner. I am licensed, which means that I'm not giving you advice over the internet via YouTube, which should be considered actionable. You should talk to someone who has an understanding of your individual situation. So this is just for entertainment purposes only, and you are responsible for doing your own due diligence. But yeah, let's go ahead and talk about what's going on in the market. And yeah, so go ahead. And then, all right, is there still an echo or no? All right, so let's talk about the market crash, guys. Okay, so a few weeks ago, I made a video, and it wasn't the only video that was out there. There were plenty of other videos that were talking about a potential for a market crash. And a lot of my position on that had to do with the fact that book values had got, or price to book values gotten so out of whack that they were higher than the 10 or the 15-year standard deviation on that. So prices either had to come down or book values had to come up, and it's not easy to make book values come up, so prices had to come down at some point. It's just a natural function of markets. So one of the things I didn't realize until I did a poll on my channel a few weeks ago was how many people that watch my channel are really kind of first-time investors. They've only been investing for under 5 years or so, and a lot of folks for under a year. What I wanted to say today is that this is perfectly normal. What's going on right now is perfectly natural and perfectly normal. It was relatively predictable. I'm not claiming any credit for predicting it. There was a lot of people out there that were suddenly getting very uncomfortable with valuations. I wasn't the only one. But I'm going to say right now, right off the bat, that in terms of the stocks that you and I are interested in, probably the reason you're watching my channel, which is technology stocks and electric vehicle stocks, I really think that this represents a great buying opportunity. And for many stocks, maybe the last truly great buying opportunity to get into some of these stocks before they really go up. And part of it is because I think that the market is a little bit oversold in terms of technology in certain stocks, right? There's a lot of stocks that I've covered in the last 6 months where, if you notice, I was being extremely neutral when I talked about them in my videos, when that neutrality sometimes masks quite a bit of skepticism on my part. And I'll name names if you guys press me on it, but I'd rather not. So, all right, so I'm going to get to answer some questions in no particular order. I'm not going to scroll backwards in the chat because I'm just really bad at that. So if you guys want to ask questions, now would be the time to do that. And let's see, hey, Keith Santos says, can I ask why it's not a crash? Okay, so I guess you're addressing someone else. Oh, Julia, I wanted to say thank you for using the super chat features. I really appreciate that. So what can stop the 10-year yield from going up, says Mert Farah. Look, I don't think you should be so terribly concerned about the 10-year yield going up. Now, it was newsworthy in the fact that it wasn't any Federal Reserve action that caused the yields to go up. It was really the market that was responsible for pushing yields up. There's always the old adage, of course, that as bond yields rise, money's going to leave stocks and go to the guaranteed payment of bonds. That has certainly been true in the past, but that's mostly been true in markets where yields were a lot higher. Since about 1994, if you look at yields, there've been times of rising bond yields, but mostly bonds have declined in a relatively straight line ever since 1994, with intervening periods in there when they were rising. And there was somebody recently, and I just can't remember the guy's name, but he wrote a great article where he took a look at those periods from like 1994 to present where yields were rising and how did stocks do. And the returns on stocks were close to 15% during that rising yield period. And then when yields were declining, the return on stocks was closer to 7% over those intervening periods. So historically speaking, what's going on right now, I think there's a lot less to do with rising bond yields and a lot more with just discomfort in valuations, people taking profits off the table, people panicking because of the semiconductor chip shortage, which, by the way, I did a video on that like back in early December too, which not very many people watched. Probably because of the way I framed it as the chip shortage is going to be very, very good for BYD and very, very bad for a lot of other companies. But yeah, so that chip shortage has actually been known for a while. The semiconductor industry is something that has been well followed and well documented now for 30 or 40 years. We understand the cycle of controlling supply, boosting prices, and really controlling your capacity. Unused capacity is what kills a lot of chip companies. So let me move on to another thing here. The country is opening up. Kingston James, yeah. I do see a lot of panic selling. So Martin says a couple of great things for NIO, the Sinopec partnership and the joint venture with JAC for a mass market car. So my opinion on JAC is probably not a very popular one. I think that beyond, let's say, September, October of 2020, JAC is probably what's going to be holding NIO back. They are not the best manufacturing partner out there, and I do think that they're better off building their own factory, which they do have plans to do at this point. But I do think they are much better off doing that. They pay a pretty hefty fee, per vehicle fee, like $2,500 per vehicle to manufacture through JAC, and they were forced to cover early losses on those vehicles as well, and that's what that impacted their income quite a bit. And but yeah, I think they're actually holding them back right now by having that partner, having to clear everything through them. I do think that their plan to open up that giant industrial, electric vehicle park and research park is pretty impressive, and it actually is just sort of a copy of Knowledge City, where Xpeng is opening up one of their parks too. The Knowledge City I just can't remember the name of the Chinese city that it's in right now, but it's this giant industrial and research park that's out there that doesn't just have Xpeng. They have a half a dozen other technology firms there. The city helps them to recruit talent from all over China and all over the world, really bring in engineering and design talent and that sort of thing. So, but yeah, there's a lot going on in the Chinese market that is really hard to dig out if you're a Westerner. And you really have to do a lot of research. And I talk to a lot of people that either live in China or work in China. And at this point right now, my channel has grown large enough that people randomly contact me with information. And some of it reliable and some of it not. But they randomly contact me with information all the time. And it's getting pretty interesting. So let me see here. Any questions? So are you going to look into lithium since we have a QEL merger rumor? I don't know anything about that. Let me see. Massive bargains today. Use a couple of hours. Yeah. So I'll actually be getting off of this call just before market closes, because I do have a few trades to execute in client accounts today. They do want to do some end of day purchases. Yeah. Where are the chips? Wanted to buy new GPUs, but their prices jumped. Can I sell? Okay. So, I mean, the GPUs are, of course, affected by the whole semiconductor shortage. And like I said, I covered in my NVIDIA video one of the interesting things about the chip industry. Like back in 1997, there were 70 different GPU companies that competed with NVIDIA. By 2006, every single one of those dedicated GPU producers had gone out of business or been acquired or merged. And NVIDIA was the only one that was left standing. because they figured out how to control their basically how to control overcapacity and manufacturing overcapacity. And that's what a lot of folks couldn't figure out. And there's been a couple of good articles written recently by some industry experts when it comes to semiconductors, talking about how there's a number of factors that contributed to this shortage. The industrial capacity is already out there right now to satisfy even current demand for semiconductors. Demand has not outstripped supply. It's just that there's a backlog in supply because of our just-in-time ordering system when it comes to chips that most manufacturers here in the West have adopted. And so there's been this war for the last 30 years to control supply, to make sure that you don't have excess production capacity, and to control prices. And it's really kind of contributed to this perfect storm. And there was a great article on Seeking Alpha on this. It's really contributed to this sort of perfect storm for semiconductor makers in the last 2 years, where they're just making hand over fist profits because they managed to keep their production capacity just ahead of demand, and and demand has been increasing and prices have been increasing. And at this point right now, basically what happened last year is a lot of the just-in-time manufacturers, like people that order as they need it rather than stocking up ahead of time, they canceled orders back in second quarter of 2020. And there were manufacturing lines that were shut down because these anticipated orders were either reduced or canceled. Well, the anticipated drop in demand for semiconductors didn't happen, and these manufacturing lines were taken offline and were shut down temporarily. Right now, they're in the process of bringing people back to work those shifts. They're in the process of opening up those lines again, but it's going to take anywhere from 2 to 4 quarters for production to catch back up to demand. Like, car makers like GM basically lost their place in line to get semiconductors. And when I say lost their place in line, there is very literally a line at this point at most semiconductor makers in order to get deliveries of the chips that they need. So it's going to take anywhere from 2 to 4 quarters for that to shake out. So if you're worried right now about missing a bottom or missing an opportunity when it comes to any company that's related to just the use of semiconductors, I think you have plenty of opportunity. This is not a short-term crisis, right? There's going to be an impact to the supply chain for the next 2 to 4 quarters. And if you're a short-term investor who just started investing last year, or even the last 4 or 5 years where we really haven't seen a ton of bad times, this could look like the apocalypse to you. And I got to tell you, it's not. This is temporary, folks. If you are long a stock, in most cases, I would suggest holding it if it's a quality company. If you have, basically, you're probably better off holding than you are trying to time the market and sell. And we can go over a number of reasons why that's the case. But yeah, anyway, so I'm going to try and answer a few more questions here. And I think there might be a little bit of lag in the stream here today. Let me see here. All right, guys, spit out some questions. I'm looking to hear it. So let me see here. What do you think inflation will do to growth stocks over the next 3+ years? Martin asks. I think that other than owning residential real estate right now, meaning like rental properties where I can raise the rent every year to keep up with inflation, that stocks are probably going to be one of the best places to do that in the next 3 or 4 years. You obviously aren't going to get any real yield in bonds, even though the 10-year Treasury has gone up. It's still at under 2%. And long-term bonds really aren't much better than that. I do think that your only hope of combating inflation is going to be either getting a newer, higher-paying job, or having growth stocks. The sort of doomsday scenarios of hyperinflation, I don't believe those. Number one, we have a lot more tools in our toolkit that aren't being used. One of the big guns in the toolkit that has not been used in a very long time is raising the reserve requirements for banks. And don't quote me on this, but I don't know that this is the exact number. But I think I remember in CFP school a long time ago hearing that if the Federal Reserve raises deposit requirements at banks from, say, it's 7% where it is right now up to 8%, that immediately takes about 10% of the money supply out of circulation. Because for every dollar that the bank has on deposit, they really only keep 7 cents of that on deposit, and the rest of it gets loaned out. So if you suddenly say to the bank, you now have to keep 8 cents on deposit for every dollar, it takes a lot of the money supply, and that's a tool that the Fed has available to it that has not been used ever as well. It hasn't been used in probably 30 or 40 years, as far as I know. So, if Florian Vraby asks, is Tesla buy under 600? It depends on your time horizon. If I was going to buy Tesla, and I'm a long-time investor in Tesla. Every time I buy Tesla, it's a long-term investment, right? If you're looking at their ambitions to sell 20 million cars, by 2030, they're going to be selling 20 million cars, according to them. I tend to believe them at this point for a couple of reasons. Number one, Elon Musk is somebody that simply delivers on his promises. It's late. Sometimes it's not in the way you want it to be delivered, but he delivers on his promises. And based on their production trajectory, it looks like that's going to happen. So when I look at Tesla at 600, and then I look at the subscription model that they have now for things like full self-driving that's coming out, and the fact that they could be collecting, I'm just throwing a number out there. Let's say they collect $100 per month per vehicle. They're making 20 million vehicles per year. Let's say at some point beyond 2030, they could possibly be collecting subscriptions from 40 or 50 million vehicles at a time at $100 a month. I would say that if you're looking at a 10 or 15 year time horizon, if you're young, you're looking at a 10 or 15 year time horizon. I think that $600 by the time 10 or 15 years is up is going to look ludicrously cheap. If full self-driving happens, if the subscription model happens, I think it's going to look ludicrously cheap. You see airline leaps. So the problem with airlines, Kingston, is that the airline industry as a whole is simply not profitable. When you look at the industry analyzed over the last 70 years, you have one or two spots of companies that are profitable temporarily. But if you look at the entire industry on a year-by-year basis, it simply isn't profitable. And that's why I think it's extremely difficult to recommend anyone to take a long-term risk on an airline. I think it's a good recovery play. A recovery play is not something that I do, but I do think it's a good recovery play. So Rufus says, if you had to buy one of the 5 companies in the title today, which would it be? Tesla, Xpeng, Lee, NIO, and Sofi. So I'm going to buy 2 of them. So if you guys don't know, like I was a pretty early investor in NIO too. And look, I was underwater for a year and a half, on that investment, but it grew so much that I can't add anymore. It would just be too much on my portfolio. I've recently made, I disclosed this on another video, but I've recently made some pretty large purchases into IPOE, which is going to merge with Sofi. I've done a lot of research on Sofi. I haven't done a video on them because I keep buying the stock and I don't want to do a video at the same time that I'm buying the stock. I think it's a little bit, dishonest to do that. Even if I disclose that, it's not that I have like 1 million followers and I don't think that I can affect the stock price or anything like that, but I don't want to be accused of that, so I'm not doing that. But I think that Sofi, they make 83% of their revenues from their loan portfolio. I know that the thing that they have most visibility on for younger folks is their app, and the fact that their app for trading stocks really isn't all that mature. The issue with that is they make very little money on their app. It's relatively new, and they're constantly adding functionality. They make most of the money on their loan portfolio, and they just got a preliminary approval for a bank charter as well, which was not that approval for a bank charter was not something that was considered when they had a projection of profitability by the end of 2021. So with most of the SPACs going public right now are not even close to to profitability, and a lot of them don't have revenues at all. I mean, a lot of these companies going public by SPAC, like profitability isn't even a dream. You look at QuantumScape, they're 7 years away from commercialized production of their technology. Like you may see something pretty small by 24 or 25, but it's still going to be in testing stage for the next 7 years. And they have a valuation of $18 billion, which I think is absolutely ridiculous. But I do think that Sofi in the other case is, people keep asking me like, what kind of moat do they have? A lot of times your moat isn't a new technology. Your moat is brand, and your moat is the ability to compete. That's something that I consistently underestimated with a couple of other stocks, most notably Apple. Apple is something that I clearly admit to have missed the boat on that numerous times. I always found a reason why I didn't like that stock, and I didn't really understand the power of brand and their ability to compete. Sofi is competing quite well when it comes to interest rates on loans, and they've really cut their expenses to a great degree. So yeah, let me see here. Let me move on to another question. I just kind of ran on. So Manuel Perdet says, so I got one question. So question, is it Xpeng or NIO in 3 to 5 years? I don't think there is an Xpeng or a NIO. If you look at the people that back them, the same people that sunk money into NIO sunk money into Xpeng. At this point right now, they aren't actually competing with each other. They create vehicles in different spaces, and they're going after different markets. Xpeng is going after that slightly down market, but much broader market of like middle-class folks and younger folks. And NIO is going after that slightly older with more money crowd interested in spending. You know, they're competing with the Model X's, they're competing with the Model S, and they're competing somewhat with the Model Y. Just to put that in perspective, further down that income scale, Xpeng is competing with the Model 3. And you look at the G3, it doesn't have a competitor. It doesn't have like a Tesla competitor with the G3. That's a $25,000 SUV crossover, and I think Xpeng is a company that's absolutely completely unafraid of the Tesla $25,000 vehicle, as well as many other companies. I just did a video on Geely recently, and they're going to be coming out with a $25,000 electric vehicle that gets 250 miles of range, that has some limited self-driving technology. It's not anywhere near what the other competitors have. But there's Great Wall Motors, and there's about a half a dozen other companies in China that don't get enough press coverage in the West for you to think that they're significant. But these are companies that are already making 1.5 million vehicles per year, and they're signing these partnership agreements with these technology companies. And so the idea of Xpeng and NIO competing is probably something we really shouldn't consider. Like I said, they're operating in different spaces, and geographically, there's huge regional variation in China, and a lot of Westerners don't realize that. But even geographically, NIO is a company that really dominates that northern part of the country, and Xpeng is a company that dominates that southern part of the country. I will say that southern part of the country in Shenzhen is that's a Pearl River Valley. It's just a gigantic market. There's close to 60 million people that live there, and this is where huge amounts of wealth is poured into that area. A lot of Hong Kong money ends up in that area as well. A lot of money from other parts of Asia end up at that area as well. But so yeah, I think both companies will do well over time. In the difference, here's the big difference I see with Xpeng and NIO. Xpeng may have made a pretty big branding mistake. I can't stand the name Xpeng. I think they have a good car, they have a good product. They're really far along in terms of their factory build out stage, but I think they made a pretty big error when it comes to branding. NIO is a car company name that simply is exportable around the world to many different cultures, and it has a meaning that can be translated in a lot of different ways. That actually it's just exportable. Xpeng, in the other case, I think it's a branding mistake. Like the Chevy Nova was, like, you know, when Chevy tried to go to Mexico and sell the Nova. Nova in Spanish means it doesn't go. So I'm not saying Xpeng has that meaning. It's just it doesn't roll off the tongue. It doesn't sound great in other languages. Yeah, so I think that's the biggest difference between the two, is that Xpeng probably has a branding disadvantage because, yeah, Li Xiaopeng really wanted to make sure that his name was in there. So, yeah. Any thoughts on insider Xpeng selling? Yeah, that's actually going on. I noticed one of the phenomenons that I've been hearing lately that I've never really heard before is a lot of concern that people have over the end of lockup periods. So look, the whole point, there's only two reasons why you go public, right? And the first one is to raise money to expand your business. And the other one is to reward people that have been there for a while, reward the investors that have been that were your first investors, and reward your executives. When you look at what what people are selling, the volume of their selling, it's not even coming close to the total volume. In fact, one of the best examples of this recently was actually Palantir. Somebody wrote a long article, and I got a long email from someone who was saying it's over for Palantir because such and such executives sold 2.2 million shares over the course of a week or two. The daily volume, somebody would have to check me on this, but the daily volume for Palantir is about 84 million shares. So 2.2 million shares over a week is nothing in terms of the daily volume. And Alex Karp was actually quoted as saying that the reason that they're going public now, back when they did their direct offering, that a large portion of it was to reward their early investors and reward the people that have been there for a while. That is not something that I want to hear, but the company is 20 years old and they're already as large as Palantir was. That's actually kind of to be expected. Xpeng as well, some of those insiders, at least I know Lee Chapun probably sold some of his stock to fund some other business ventures. He started a few new businesses recently too. So let me see. Lucid hitting $100 billion valuation is how we know this market was overinflated. That's one sign. Yes, I'm not a huge believer in Lucid. I want to see Lucid be a competitor for Tesla. I just think that the competition is going to make the market better for everyone. Yeah. So why are we starting to hear about the chip shortage while we have a surge of 30% in EV market in 2021? Man, I covered that pretty much in detail earlier in the broadcast. So Xpeng fangirl, you've commented a couple times on my channel. You always say some different things. So hi, I don't want to upset the EV scene, but I am on a hydrogen 800 horsepower to 1300 horsepower hydrogen cars, 1,000 miles range, retailing at 100K level. So rest in peace, EV people. Okay. Yeah, you're always saying like odd things. I don't know if it's just that I can't, if there's a language barrier or something, but I really don't understand what you're saying a lot of times. So, and you're going into hydrogen power. Okay. And that's something else that I've covered pretty extensively is I love the idea of a hydrogen economy. I think I think it's a great idea. I think that we missed our moment. The moment to do that was probably in the 70s when we could have broken free of that. But you're not going to have the infrastructure for a battery electric future is already in place. Those plugs to charge your batteries are all over your house. You can use your dryer plug to charge your car, or you can reconfigure your dryer plug to do that. All that infrastructure is in place. It's to build out the infrastructure for hydrogen economy at this point. I think it's still better than a gasoline economy, but I don't think it's going to be able to compete with a battery electric economy, except in a couple of applications. I think that at some point, maritime shipping may switch over to hydrogen power. Number one, you know where those boats fuel, you know where those ships fuel. Number two, yeah, you are absolutely able to. Basically, hydrogen is a pretty good fuel for things that are moving offshore, from port to port, where you know they're going to fuel in between this port and this port, and that's it, right? As far as building out an infrastructure with thousands of stations across the United States, all with liquefaction, cooling, compression, all that stuff, it's probably not going to happen. Yeah. Let me see here. So someone looking, I see that NIO already did 87, negative 87.2. There's the same thing happening right now. Is it different to sell off and deflate the EV bubble? I actually don't think that EVs are in a bubble. I think that individual company valuations have sort of outrun their fundamentals, and we're just seeing kind of a reversion to reality here. Even at $38 a share, if I was evaluating or $39 a share, if I was evaluating NIO the way I evaluate, say, Costco, then of course it's wildly overvalued. But you don't evaluate a growth stock in the same way that you evaluate something like a Costco or a Walmart. You're actually planning for future growth into that. So, Tesla at 1,000 times sales, which I think it's close to 1,000 times sales today, or 1,000 times, not sales, but earnings today, that would be considered extremely overvalued until you consider their potential, 10, 15 years down the road, and you look at that price tag. So, thoughts on LiDAR companies? David Bowers. Yeah, I have a lot of thoughts on LiDAR companies. I did a video on Microvision where I thought I was pretty fair with microvision. It was one of my least liked videos recently. I don't. First of all, I see the applications of LiDAR really being redundancy for self-driving. I don't see it as being something that's all that reliable. It doesn't work in rain. It doesn't work in fog. It doesn't work in a number of other types of adverse atmospheric conditions. But it is a good source of redundancy. So for data. But I don't know. I don't think it's going to be a permanent solution. I think that the millimeter wave radar and visual recognition software is probably what's going to carry the day. LiDAR is very interesting, but yeah, Xpeng went LiDAR. Yes, they did, and very importantly, they're using LiveVox, which so one of the things that I heard about microvision is everyone was talking about on this one Reddit group that microvision is being tested in cars in China. It won't be used in those vehicles in China, and for a couple of different reasons. If you look at the way LiveVox was structured, LiveVox was structured in a way that sets it apart from DJI, when in reality, it was actually LiveVox, the LiDAR producer for Xpeng, is not a wholly owned subsidiary of DJI, but it was started in their sort of business incubation program. And that has to be, to some degree, to sort of insulate itself from the criticism, because DJI actually has connections to the Chinese military. And when you're looking at some of the sanctions that might be placed on China, or some of the restrictions on doing businesses that are controlled by the Chinese military, that makes sense that they set up LiveVox in that manner to insulate it from that criticism. But in terms of that technology, it looks like the Chinese government is actually encouraging Chinese car makers to use Chinese LiDAR manufacturers to do this. Elon Musk is really, really down on LiDAR. He says it's a dumb idea. But recently, and I saw photos, there were vehicles moving around the San Francisco area that had LiDAR on their cars, or on their roofs, and that looks like it was just there for collection of more data. Maybe it was there in order to test out LiDAR, to see how well it works. Who really knows? Because he never commented on that. Yeah. So there's a couple of different stocks right now that got a lot of news coverage last year, but absolutely have gotten crushed. Nano Dimension is one of those, and BioNano is another one. So Nano Dimension, there's been a little bit of an added wrinkle with Nano Dimension. They've got 3 other competitors on the market right now. You can say what you want to about their printers or the way they look. The real business model for Nano Dimension is an old business model. It's not a new one. It's basically the same business model that HP has, except it's with 3D printing and not regular printers, where they're going to sell you the printer. It's not cheap, but it's not as expensive as it could be, and they're going to make money by selling you their dielectric ink, right? So the issue is with the other 3 competitors. I just looked at the article maybe a week ago. These 3 other competitors have machines that are really ugly, that are priced a lot cheaper, but most importantly, they all have their own patented dielectric ink as well. So the Nano Dimension is no longer the only company that has a patent, right? And they're all patent pending as well. How long it takes for those patents to shake out, who knows? But that's kind of the case. They have competition entering, so they could be a target for acquisition at this point, or they could be looking to acquire. I will say one thing: they went to the well in terms of capital markets like 8 or 9 times in the last year. They have a huge war chest at this point. Nano Dimension can afford to go out there and acquire some of their smaller competitors, and they might be looking to be acquired by a larger company too. So we don't know. So Elon used to say Bitcoin was dumb, and that changed. Might change his mind on LiDAR. He might. I don't ever recall him saying that Bitcoin was dumb. So yeah, I don't ever recall him saying Bitcoin was dumb, and I don't think that Bitcoin is dumb. But just like, so what backs the value of the dollar today is really the claims paying ability of the United States government, meaning that when you have a bond, a bond, the U.S. government pays you. Now it might be in dollars that are inflated, but they pay you, and we've never failed to pay on our obligations. So there's not a bond issuing authority to back the value of Bitcoin. So Bitcoin is valuable because everyone believes it's valuable. In a way, though, what also backs the US dollar is just faith, right? Just like Bitcoin is, right? It's a bit more complex than that. But I'm starting to get more and more on board with Bitcoin eventually being a real medium of exchange for data, not necessarily everyday transactions, but large transactions. I've actually been tracking it since it was first used in financial crimes, maybe 10 or whenever it got started, like 2011, 2012 or something like that. It caught my eye because it immediately was used by people who did like cyber hostage taking, where they'd send you a virus, it would take over your computer and say, send $10,000 in Bitcoin to this email address and we'll unlock your computer, right? That immediately is what piqued my interest in that. And then I started doing more and more research on it and realized that it was really quickly adopted by the criminal world. And there were a couple of other instances in history where it was the criminal world that adopted certain innovations in technology, and that ended up spreading to the mainstream. So there's one of the guys on my Patreon, I think it's Jonathan, he's on here actually. He brought up a good question in our Zoom meeting about distributed financial transactions and decentralized financial transactions. And that's something I'm going to be looking into more and more and more. I think we're going to see a democratization in a way, and not just Bitcoin, but all of your cryptocurrencies are enabling this sort of democratization of financial transactions. And I think that's going to be interesting. And I don't know anything about Cardano though. All right. So full self-driving, show of hands here. Who owns a Tesla? So I don't own a Tesla. I was going to buy a Tesla a few years back, and instead of buying a Tesla, I ended up buying Tesla stock. Probably one of the best decisions I ever made. Okay, I ended up buying more Tesla stock. Didn't seem like one of the best decisions I ever made because I was literally down on that position for like a year and a half. I was underwater. But at this point now, 3-4 years later, it looks pretty good. So Annie says, are ARK and funds still good investments? So by its very nature, an ARK fund is not going to be a short-term investment. If you're going to put money into one of Cathie Wood's funds or any ETF or mutual fund, your time horizon on that should really be anywhere from 5 to 7 years. It's not a short-term investment. I think now is a good entry point for her funds. I think now is a really good entry point for her fund, especially in the genomics fund. The genomics stocks have really gotten hammered in the last couple of weeks. So, yeah. And Jonathan says, I think the DeFi space, the distributed finance space, needs to endure a crucible before it's mature enough to compete with existing institutions. I would agree with that. I just don't know what that crucible is going to be. It would probably have to. It would probably have to coincide with the failure of some sort of centralized system. Like we had a country whose central banking system collapsed somewhere. That would probably be, and no matter how small that country was, that would be disastrous for the rest of the world. Let me see here. I see Bitcoin going for a correction now. I see 40-ish or even lower levels. It went 500% in 5 months or 100%. I think that's perfectly reasonable. Bitcoin's a really volatile asset. I'm not even sure I should call it an asset. So I have a little bit of Bitcoin, not very much. It's just a couple $1,000s, but it grew from a couple $100 into a couple $1,000. It's not something that I pay attention to on a day-to-day basis, but I do check the price every once in a while, and I find Bitcoin's fascinating to me. I'm still not sure I really have a handle on that. Let me see here. When is Xpeng going to go up? So Xpeng is like I did a video yesterday on Xpeng, my expectations for their earnings. My expectations for their earnings are just like NEO. They're going to have widening losses. Xpeng in particular is putting a lot of money now into their sales network, which really lagged behind NEO's sales network. NEO did a really good job building out a sales network, did a really bad job building out production facilities, production capacity. I mean, they abandoned their plans for a factory in 2019. They tried to frame it as, this is better for us. But the reality was they didn't manage going back to markets and getting cash very well. When they got rescued by the Hefei government there, they made a deal as to where they were going to locate their factories. And it's taken them a while to come up with a deal to create new factories, but they've done that. They signed that deal a couple of weeks ago. I did a video on that too. I'm really happy about that, but they need to get to volume production pretty quickly in order to be profitable. I see profitability for Xpeng probably 2 to 3 years out. I see them anywhere in the next 3 to 6 months, back in the 50s probably. at this point. I think that the promise for their business is just too high, especially now that their vehicles that they've shipped overseas so far have sold fairly well, but they only shipped 100, and now they shipped another 200 out to Norway. Norway is in terms of percentage, it's the largest EV market out there. Like I think 60 some odd percent of all vehicles sold in Norway last year were actually electric vehicles. So there's actually a couple of other markets in Europe where the share of EVs is between 30 and 50%. Iceland is one of those places, but there aren't that many cars that are sold there. And Holland is the other one, and there are actually more cars sold in Holland. But those are a couple of different places, and Denmark is another place where I see them expanding in the next couple of years. And someone pointed out in my Patreon group too that a job posting just went up in Germany by NIO for a battery expert. So that was somebody that posted that article in my Patreon group. I have not actually seen that article myself, so I can't verify. I can't speak to its veracity, and it came from a Reddit post, so who knows whether or not that's accurate or not. But I do know that for a fact that recently NIO acquired property of some sort in Denmark. It looks like they're putting up job applications in Germany right now. So some sort of European expansion. I know that was mentioned in their earnings call, but it looks like it's going to be a reality. So let me see here. Adam, you could also debate if Bitcoin and crypto is good for the stock market. Man, I would really hope that one has nothing to do with the other. Yeah, and I don't think that Bitcoin is a hedge for a stock market. Right? I don't think it's the best hedge against stock performance right now. It's for a while I was really hoping that it would be a true hedge. It used to be that. One of the things that's gotten confusing over the last 20 years or so is that all asset classes have started to become more closely correlated, no matter what they are. It used to be that bonds moved in the opposite direction that stocks did, and with regularity, and that was predictable. It used to be that international was not tied to domestic. It used to be that small cap was not necessarily tied to a large cap. Now all of those assets move more closely in tandem than they did before. I was really hoping that. That Bitcoin would be something that we could see as a real hedge, meaning that when stocks went down, Bitcoin was doing its own thing and was not predictable. That's not really the case. When you're looking at Bitcoin over 2020, it was pretty closely correlated to the stock market. In 2019, it was not, but over 2020, it was pretty closely correlated. And I just saw some research on that recently. So I'm hoping that that's not permanently the case, or maybe I'm hoping that when you look at a longer time horizon with Bitcoin, that it will turn out to be a relatively uncorrelated asset class right now. Right now, it's not. It doesn't look like that right now. So, all right. So investing with Jace, he's in the comments right now. If you guys don't know, he has been watching my channel since the beginning. He's got his own channel. And I got a couple thousand subscribers. He just hit 1,000 subscribers last month. He's got some great content also. Go and check out his channel. Subscribe to his channel. That would be great for him. It would help him boost his numbers and be seen by more people. One of the big struggles that everyone has is once they get monetized, it's still not easy, right? You still have to keep going and keep producing content and getting better every time you do a video. Jace's videos, man. Every time he does a video, it gets better. I think that's pretty amazing. And yeah, Mr. Negative says Bitcoin is basically a tech stock. Yeah, that's my worry. Is that that's the way it behaves. So I saw a video on Xpeng, and they were showing the cars in Costa Rica and in Spain. Oh, okay. I didn't see that video. That's very interesting. I know that they brought a few vehicles here to the U.S. and there were some test drives that were done too, but yeah, I haven't seen that. Do you think that NIO will recover in 3 months? I think it's fairly likely that NIO recovers in 3 months, but I want to say that with a caveat here. It really depends on where they are in line when it comes to semiconductor production. I think that the real, and this is underground, but one of the real big beneficiaries of this semiconductor supply crisis right now is going to be BYD. They make their own semiconductors and they make their own IGBTs. What's going on with most of these electric vehicle makers right now is they can't make IGBTs because they can't get the chips to make them. So and that's sort of the governor of the engine of the electric motor there. So Shoeless Joe says, have you bought Iovance Biotherapeutics? I have not. So I tend to do most of my investing in genomic stocks and and pharmaceutical stuff through an ETF. I like to investigate the stocks. I like to know what those folks are doing. But I'll be honest with you, I have made some horrible calls in the past when it comes to biotech and to pharmaceutical stocks that I thought I understood what I was looking at. In a lot of cases, I really didn't. I think one of the stocks that I was looking at earlier this year that I was initially really excited about, I talked to a couple of folks who are in the genomics field about BioNano, and they are far less enthusiastic about it. Like actual scientists, they are far less enthusiastic about it than investors are. So is BioNano a buy now at the price it is? Probably. Was it a buy at 14 or 15, wherever it was a few weeks ago? I don't think it was. But at this point right now, if I had unlimited amounts of cash, I would probably buy some BioNano, but I don't, so I do not. I have been adding to my positions lately, but it has not been BioNano. I'll go back to BYD for a second. The BYD Han, which is their sort of Model 3 competitor, is actually doing really well and has sold a lot of models. Like, I think though in this space they're not really competing in a way with the Model 3, but they're also competing with Xpeng's P7. And if there is a chip shortage, I think that we may see sales of the BYD Han surge and sales of the P7 remain flat for a little while. It mainly just because those cars will be available. So the advantage that the P7 has, of course, is all of their autonomous driving features, all of the technology they have in that. BYD's tech is a lot. It's pretty far behind Xpeng. GA says, would you buy Tesla? Heck yes. Yeah, I would. I bought some Tesla earlier this week. I bought some Tesla today, and the only reason I'm not buying more is I'm waiting on more money to come in. We see here. Actually, Dylan Moss brings up a good point. Are consumer sector ETFs like VCR, VDC good hedge investments right now? So I'm not sure that they're necessarily good hedge investments right now, but one sector that I've been consistently talking about recently has been residential REITs. And I've been talking about that for months and saying there's good opportunity there. And so I've been buying a bunch of RES, which is an ETF of residential REITs, right? They hold a bunch of apartment REITs in there, some long, and one of the reasons this is so good is this is really sad to say, but the long-term care REITs got hit very, very hard by coronavirus because many of their patients passed away. And some of them got hit so hard that they were far oversold. So the opportunity in residential REITs has been there for months and months and months, and it's just now getting to the point where it's recovered to its pre-2020 levels. But the yields are actually really, really good right now on that too. So looking at RES, or even looking at the component pieces inside of RES, the ETF, the ETF that really just focuses on residential REITs, that actually looks it still looks pretty attractive to me, and it has been relatively untouched by recent market volatility. One of the things, if you guys know what Realty Income is, that symbol trades under the symbol O. So they focus on retail, and retail is enormously unpopular right now. There's a retail apocalypse going on there. But most of Realty Income's portfolio is really large, like big box stores. Think the Walmarts, think the Home Depots, places like things that aren't going away. And their rent collection never really dipped very far below 90%, even during the worst of the crisis. I think it was like 86% for 1 month, and then was back over 90 the month after that. So especially in Realty Income, I do see some opportunity there. Aside from names, Xpeng, which would you buy? Tesla, NEO, BYD, Xpeng? Be honest, Lo. So I think that eventually Xpeng is probably going to be a leader in terms of actual revenues and profits, and that's just because of where they're grabbing market share and how much larger that addressable market is. There's just a lot more middle class people than there are people that are wealthier. I think that both NEO and Xpeng are really going to be primarily Chinese brands. I think they're not going to have as much success in the long run in international markets as European EV makers and Tesla will. I just don't. If you look how long it took for Korean car makers to be not considered pieces of junk, and to still be considered, and now to be considered really major players in the West, it took almost 30 or 40 years to do that. So China attempted to break into the internal combustion engine market in the West for 40 years and failed. And they failed mostly because of quality issues and because actually it was the founder of Geely, actually Li Shufu, made a really interesting point. He said that the Chinese manufacturers in the internal combustion space were so lazy because of these joint venture agreements that they had with all these Western manufacturers, where really all they did was produce parts. They were guaranteed a profit. All the innovation came from the Western makers, and they just didn't do enough of their own R&D. That has really changed with the new wave of entrepreneurs. Like this new wave, so Li Shufu really represents that sort of second wave of Chinese entrepreneurs that graduated from university in the late 1980s after the economy had opened up a little bit. When you look at the founders of Li Auto, the founders of NIO, they're from an Xpeng. They're from a slightly later generation of folks that had even more they had even more freedom, but they also had more to criticize too when it came to how stagnant some of the technologies were. And so they're not making the mistakes of past generations. They're investing tons and tons of money into research and development. And I think it's time for us to acknowledge here if you live in the United States, it's time for us to acknowledge that in a lot of ways we have handed off this revolution to China at this point. That other than Tesla, we have not created the environment necessary for other companies to succeed. We're not doing enough public investment into these technologies like the Chinese government is. Like they're creating these giant industrial parks to foster, and they're basically creating Silicon Valleys, not just all over China at this point. That's happening a little bit today in the United States. It's really driven by the market, but it's not done with like public investment in it, right? So there's companies that are moving to Miami right now, which looks like it's going to become a new technology hub, and companies moving to Austin right now, which looks like it might be a new technology hub. I welcome that distribution. I really do. I think there should be more than one place to have a startup. There should be more than one place where venture capital dollars flow, and I look forward to seeing that. So Mr. Negative says that Tesla is the lowest risk EV. Yeah, I think it's the lowest risk EV. So don't get me wrong. I think that NIO and Xpeng, if you look at the Chinese car or auto industry, very few of those auto brands go out of business because of the government support they get. The biggest danger with NIO and Xpeng is that they're never going to live up to investor expectations. Right? They're never able to truly compete and live up to their expectations. And if you don't think that's a danger, it is. China has 130 car brands right now, and another like 40 that are opening up this year. And some of those cars, one of the largest producers in China is Geely, and they only produce 1.5 million vehicles per year, whereas a company like GM here produces 7.5 million. So their market is extremely fractured, right? The company with the largest market share in China is actually VW with about 14% of their total market, right? So this is an extremely fractured market. Is there opportunity to consolidate? Yes, but there's also destructive competition where everyone who went through that Chinese manufacturing licensing process is involved with so many like local officials and government officials who have no interest in seeing that company go out of business. But it also does a lot to limit actual competition, and it's okay for some companies to go out of business to force other companies to innovate. And I think that's changing in China to a degree. But the biggest risk in NIO is that they continue to incrementally grow. After the next couple of years, their growth slows to 7 to 10% a year, and then it stays there forever. This is what happened with many different manufacturers in China, is that there's such regional variation, and there's such competing interests in the country rather, that they don't necessarily go out of business, but they never perform to expectations. That's happened quite a bit, and it happens here too. But I think it's very, very, especially with auto manufacturing in China, and I've been studying this for 20 years. I remember going to car shows in the late 1990s when they had the first like government cars to come to auto shows. It was just ridiculous crap. And the first privately produced Chinese vehicles, period, showed up on auto shows probably around the 2005, 2006 timeframe, and they were still laughable, just utterly laughable in terms of quality. Like no better than what was produced in East Germany in the early 1990s. That's the level of what I was seeing in vehicles. And I actually have driven both a Trabi and a Wartburg, the two East German cars, and they were hunks of crap. And 10 years later, in 2005, 2006 timeframe, these Chinese internal combustion engine vehicles were no better, but all that has changed now. NIO's probably going to be that first premium brand of anything that comes out of China and becomes successful. So our insiders finished selling Palantir. Probably not. And I'll tell you, so I've actually been involved in my lifetime in a couple times of working with some like high-powered executives with mostly with biotechnology firms here in San Diego, where the companies went public. They got a large number of shares, and they usually had an agreement to not sell the shares within a certain time period. But they also had an agreement where they had to work for the company for a certain amount of years after that. And they have to file a Form 4 within a couple of days after selling the car, or selling their stocks rather. But in most cases, they created an option collar around the stock to preserve the stock price, meaning they have the right to sell at a certain price, and they have the right to, and they sell the right to buy at a certain price, or one of those. And I'm not going to get into the particulars of that, but they have an option collar around a certain price that they want to sell, and it's not going to go beyond that. So if the price dips below a certain price, it's going to trigger a sale, or if the price goes above a certain price, then someone owns a call on that, and they're going to call it away, right? So they have a put and they have a call. They've sold a call and they own a put, and it's protecting that price around there. So you're probably going to see continued sales over the next 2 years of Palantir from insiders. Not that this is a bad thing. Like I said, there's only 2 reasons why you go public, and that number 1 is to expand your business, and number 2, it's to reward the people that have been there for a while. So I think that battery swap needs to happen in European countries. Not all of us live in houses that are suitable to have chargers. I think that's what's probably more likely to happen is that everyone's going to live in a location where it's suitable to have chargers. I mean, that's probably going to be put everywhere. Battery swap has a number of different problems with it. And you said, I've been of the opinion from the very beginning that battery swap is a temporary solution. I don't think it's going to be around for longer than a decade. And after that, infrastructure will be more mature, battery technology will be better, and charging your battery will take 6 to 10 minutes, right? I just don't think that we're going to have battery swapping involves having extra batteries laying around. But also, like I said, if you're looking at the lithium ferrophosphate batteries at this point with cycle ranges between 4,000 and 5,000 cycles and range of 250 miles, that's a 1,000,000-mile battery right there. The average driver in the U.S. could drive for 50 years and not drive for 1,000,000 miles. That battery is never going to wear down in the lifetime of that vehicle. I mean, that vehicle is not going to last long enough for you to put 1,000,000 miles on it. And hopefully that lithium ferrophosphate battery ends up in the grid somewhere as stationary storage. I think that's what I'm hoping is that if you ever decide, or if you junk your car, your battery may actually still be useful once the car is junk. So, Gevo. Oh, I went over Gevo a couple of weeks ago with someone else, and I forgot everything about that. So Monroe says that battery swap is stupid. I think it's, like I said, it's a temporary bridging method to ease range anxieties until infrastructure catches up. I think it's a better idea for China than it is for the United States. It's probably maybe even a better idea for a really densely populated country like Holland or Israel or something like that. And still temporarily. Eventually, like I said, infrastructure will catch up and battery technology will catch up. Fisker was just saying that they had a battery technology that you're going to be able to get to 80% charge in 9 minutes. We're already looking at 15% or 80% charge in 15 minutes for certain battery technologies. I think that battery swap. I mean, if you look at the way NIO is building their battery swap stations, they're building this as modular temporary units that can be installed in 3 days, meaning that you have to wait longer for the state-owned power company to hook up power to the battery swap station than you do to build the station itself, right? They can assemble it in 3 days now, right? And now with the new battery swap station 2, it really only takes up 2 parking spaces. They're able to assemble that in like 24 hours, right? So I think that, and the whole thing is like they're doing this as inexpensively as possible. It's automated, and you can literally pick them up and move them. And part of that is just satisfy demand. But I think that a charging network just has a lot fewer parts. And that's a big deal. Having a lot fewer parts to maintain is probably the better way to go. They're going to make more money off of superchargers than they are off of battery swapping, even though there's a subscription fee for battery swapping. Yeah. So not all of us live in detached houses. You live in apartments. In the future, all of your apartments will be able to charge too. Yeah. Do you think sodium ion is worth investing in? I do, for a couple of different reasons, and I did a video on this, like on when all the lithium is gone. It was kind of tongue-in-cheek because lithium's not going to be gone. It's just all of the cheaply available lithium is going to be exploited at some point, and then we'll have to go through more expensive methods to do that. Whereas sodium is readily available everywhere. A lot of the research that was done on lithium-ion batteries has correlations to sodium-ion batteries as well. Not everything, of course. The sodium-ion is much larger than the lithium-ion, and it doesn't fit as easily between the layers of the anode. Is it the anode? Yeah, the anode layers. So there's some issues with that, and other research needs to be done. And but like they're looking at some graphene anodes technology that's pretty interesting at this point. But I do think that battery technology, seeing that in other applications that don't require as much energy density as an electric vehicle, is probably not too far away. Meaning we're probably going to see that in watch batteries. We're probably going to see that in phones. We're probably going to see that in a lot of different things. You probably won't see it in vehicles for a while. It would mean that lithium-ion battery chemistry is probably going to be reserved for your most energy-intensive applications, and we might be using. Somebody else in my Patreon group made a couple of points with molten salt batteries, with gravity storage, with vanadium flow batteries. There's a lot of different battery technologies out there, folks, that are going to be used, particularly when it comes to grid storage. I think we're going to have 2 or 3 dozen different ways that we store energy with grid storage. We should probably talk about what's going on with. I don't want to get into politics, but I hope you guys understand that, that what happened in Texas with people almost freezing to death, and had almost nothing to do with wind power or solar power or any of that stuff. It had to do with Texas not being prepared for winter. If you guys didn't know, I grew up in Texas, and I moved out here in my early 20s. But Texas is unlike any place in the United States. A lot of times they go their own way just to go their own way without really thinking about it. So they didn't lose power because just because their windmills froze. Their windmills froze because they weren't winterized. But areas of Texas that were not on the Texas grid, that are on the national grid, like El Paso and a couple of other areas, they didn't lose power. It's only the areas that were on the Texas grid that didn't spend the money to winterize that went under. But folks that were opposed to green energy wasted no opportunity to claim that this was a result of the Green New Deal, which is not even signed into law, or other ridiculous things. But I think it was absolutely amazing that this was blamed on that. Tommy Flanagan says, I live in Texas. Yeah, I'm from Tomball, Texas originally. I don't know if you, that's where I grew up. I don't know if you know where that is. Let me see here. So what do you think of the expert evaluation of NIO to $70, $75 for the end of 2021? So I'm going to be honest with you, Nicholas, I hate price targets. Particularly, I started hating price targets in 2020 when every time NIO got a new price target, the stock immediately went to that price target. But I hate price targets which people don't necessarily understand what that means. Mostly what the analysts are saying is that at that price, at $70 or $75 per share, it's fully valued. It's fully fairly valued. There is no way, if you're looking at that at NIO even by the end of the year, even if they're not going to, I don't think they're going to eke out a profit by the end of the year. I think that profits are still a couple of years away. Right? I think they're not going to be profitable until they make 500,000 vehicles per year. Right? I think that's probably 2 years away. But I think that even by the end of the year at $70, $75, it's still going to be considered by traditional methods an overvalued stock. Even when you look at their like price to sales, it's going to be overvalued at that point. And I like I said, the biggest danger in NEO is not that it goes out of business; it's that it disappoints. But I own NEO, and I own a lot of NEO, and I sold some of it in December just because it was more than, it ended up being like 13% of my overall net worth, so I had to sell some of it. And then I'm buying some other EVs, and I think that Henrik Fisker was correct that we are a long way away from commercially viable solid state batteries. That we may have one available for longevity testing by the end of 2021, 2022, but we're not going to have volume production of solid state batteries for years. There's a couple of different issues right now. Mostly there's something called dendrite growth that ends up piercing the barrier between the cells and causes shorting, and it just reduces the lifetime of the battery. It doesn't cause fires like it would in doing that to a lithium-ion battery would. But there are some issues with that aren't solved at this point. Henrik Fisker seems to think, and this seemed to be a veiled attack on QuantumScape, because they were sued by QuantumScape and they settled with QuantumScape in, I think, June or July. I don't remember. But usually, anytime you settle a lawsuit, there's a non-disclosure agreement there. There's certain things you're allowed to say and certain things you're not. But this seemed to be sort of a veiled shot at QuantumScape, saying that your technology is nowhere near commercially viable and that you are nowhere near being able to produce it in volume. So, whoops. Okay, live stream is back. Okay. All right. So I don't know what you guys heard about my things or my talk on solid state technology, but I don't think that it's ready at this point. I think that QuantumScape at $18 billion is a ridiculous valuation. I mean, I would probably buy QuantumScape at sub 20, maybe sub 15 at this point. But to be honest with you, they're 4 years away from revenue, 8 to 10 years away from profits, I think. So let me see here. What's up with Hyliion? So Hyliion is a company that I have liked for a long time. I own 100 shares of Hyliion. It's not a lot, and I own sometimes small amounts of a stock just to keep it on my radar. I deal with other people's accounts all the time, and most of my clients don't actually have a lot of individual stocks. It's mostly what they have is these are folks that are have quite a bit of wealth and that are planning for retirement or planning, doing education planning, estate planning, that sort of thing. So sometimes I keep a small amount of a stock in my account just to keep it on my radar, and Hyliion is one of those. So I like Hyliion a lot. I like there was a short report that was done on them by Bonitas Research earlier that was just crap, and I went over it. And I like Thomas Healy because he doesn't make a ton of grandiose claims that he's not able to back up. He is an engineer himself. He's been pretty quiet. I will say one thing. I haven't looked into the latest claim they've made about the cycling capability with their new, I think it's a titanium or lithium titanium oxide battery. I haven't looked into that yet. It seemed a little ambitious of a claim to make. I will have to look into that more to make sure that that's true. But Hyliion is something that I think could be successful. I think there's a window for success. So when you look at the Tesla Semi, and you look at they're coming out of a version that will have a range of about 300 miles. They're going to come out with a version that has a range of 500 miles. What a lot of people don't understand is that range has been calculated with a full load at 80,000 pounds, right? So 80,000 pounds and 500 miles is a lot of range, but it's actually short. So if you look at the long haul trucking industry, those truckers need to make their 600 miles a day. So you're 100 miles short. The problem is, or not the problem, but the issue with that is that's a calculation done with at full load right at 80,000 pounds. As one member of my Patreon pointed out, a lot of what you ship across the country is not really all that heavy. It's high volume and not high weight. So your range is actually increased because a lot of times you're carrying a high volume of stuff that's not even close to 80,000 pounds. It might even be half of that. So your range is going to be increased in that case. So in that 600 mile and less range that is needed for a vehicle between charges, or I'm sure it's going to be less than that because you don't get 100% use out of the battery. I think that Tesla will end up dominating that space. I think that for longer hauls, for longer delivery routes, for less certain places where infrastructure is less certain, I think that Hyliion's model, just like Li's model, Li Auto's model for a vehicle with a range extender, has some promise there. And the thing that he's done is he's made this also fuel agnostic. Like they can put a hydrogen fuel cell in there. They can put a renewable natural gas engine in there, generator in there, and that helps to extend the range anywhere from 900 to 1,300 miles, depending on the couple of different estimates that I've seen. So the benefit, and I'm sure the numbers have changed since I did my research on this. The benefit with going with renewable natural gas is that roughly 40% of the natural gas that's being provided at natural gas stations right now is already renewable natural gas. It's produced from things that recently died, basically. And that infrastructure is already there. There's already over 700 stations out there where natural gas driven trucks can refuel, right? So that infrastructure, and it's already out there on major shipping routes. So that infrastructure is in place. Now, a lot of people that have not studied, trucking, they seem to think that you can reuse the piping infrastructure for a hydrogen economy, and you can't. The hydrogen molecule is just so much smaller that you can't use it. You can't really pipe hydrogen around, right? So there's a lot that goes into storing it, right? You have to have cooling, liquefaction, compression. Part of your efficiency is lost at every stage of that process. So your basic hydrogen fuel cell vehicle is about 25% efficient, which is, by the way, is more efficient than, say, from well to wheel. It's about 25% efficient. Which, by the way, is more efficient. It's still more efficient than a gasoline vehicle is, but we know our economy is not based on efficiency. It's based on it's based on a lot of other factors. It's not even the cheapest thing out there. But I don't see it really competing with renewable natural gas and a battery electric economy in the long run. I love the idea. Don't get me wrong. I just don't see it competing with both of those at the same time, and having to build out a network of 700 to 800 refueling stations in order to basically satisfy all the shipping demands in the U.S. But I'm actually more still, I don't think Nikola, even though they've gotten rid of some of the bad actors there, Nikola's never going to be what Trevor Milton claimed that it was going to be. I think Hyliion has a shot at being a player. Do I think you're going to 100x your money? No, I don't. But I think you can probably see some good linear growth out of that company for a long time. PACCAR is the other company that Kathy Wood just picked up. I just did a video on them not too long ago. They are getting into this space as well. Dana is another company that's produced their own battery electric like hybrid drive, and they have their own sort of fuel agnostic system that they're putting together. So trucking is changing all across the industry. It's not just Hyliion. I guess kind of the biggest kind of collapse that's come out recently has been with Workhorse. With them not getting any of the postal service contract, I think that probably spells the eventual end of Workhorse, or they're probably going to end up merging with someone. And as a distinct company, I think they're going to be done. I don't know. Let me see here. What else do we have here? What's going on, bro? The market is down 3 weeks in a row. That's what markets do sometimes, man. So let me tell you about my history with Tesla, and I can tell you that trying to trade around something is not going to work out for a lot of people in the long run. Meaning you're trying to sell out now, buy back when the market looks better, or maybe you sold out 3 days ago, 4 days ago. You feel great that you sold out a NIO 5 days ago or something like that. You're going to come back when things calm down. So the problem is like when things come back, so your gains on any day-to-day basis are relatively meaningless. Meaning if I'm up 10% one day, there's almost a guarantee that I'm not going to hang on to that gain over the long term, right? So the market or any stock only hangs on to gains a couple of times a decade, not a year, right? And there's all kinds of research to back this up. The worst thing that can happen for an investor, and I've seen this happen over and over and over, there's someone who begins to be a stock picker, is they call it right once, right? They call it right. They sell at the top, they buy back at the bottom, they feel great. And they have this belief now that they're just an expert trader and they can do this over and over and over, right? The reality is nobody can do this over and over and over. Even the best money managers on the planet, people who do this for a living, who have access to far better information than you and I do, they don't outperform their index over time. And I'm talking 88% of active money managers in any given year don't outperform their index. And over a 15-year period, that number doesn't change. Roughly 88% of all actively managed funds don't outperform their index, right? To be fair, some of them aren't trying to outperform an index. They're compared to one, but they're not trying to do it. They're trying to limit risk, right? But that's the thing. Like, even the ones that are literally trying to outperform the index, they're not successful over time. And one of the most well-known phenomenons is that even managers that do outperform their index, if they do it over a 5-year period, they're generally not able to do it again, right? So there's something called the Xpeva Persistent Scorecard that's put out every year by S&P, and they also put one out. It's called the Active versus Managed Scorecard, and this is free research put out by the S&P. You guys should take a look at that sometime. It's absolutely illuminating that it's not even just that 88% of actively managed funds don't outperform their index. When you look at the persistent scorecard, you look at the likelihood that if you are a fund manager and you are in the top half of your peer group, meaning that even if you're in the top half of the peer group, it still means that roughly half of you didn't outperform the index, right? So even if you were in the top half of the peer group, there was a 62% chance that in the next 5-year period, you're going to be in the bottom half of your peer group. So I think that's a stunning number that shows that even the best professional money managers over time, without luck, are not going to be able to outperform their index. So let me see here. What's the second of your favorite stocks and that you think will return long-term well? So I think that investing with Jace asked that. I think that's going to be Sofi. And I have to, like I said, disclose, I'm not unbiased here. I own a lot of IPOE, and I've acquired a lot since December. And I'm betting pretty big on them. And if I get lucky, and it is luck, because I think I know what's going on with the company, but I've been investing long enough to know that, like I said, 70% of my portfolio is in the really boring ETF, index fund route, and the other 30% I swing for the fences, right? And I've done really well swinging for the fences, but I've been doing this long enough to realize that a lot of it's luck, and it's not necessarily skill. Do I think I can evaluate companies? Of course I do. Everyone, when you have success, you become a little bit arrogant. You think you can do this, but in the back of my mind, and part of the reason I do my videos is a sort of therapy for myself to say, look, I have to evaluate things objectively, and I have to look at my own skills objectively. A lot of it comes down to luck. Do I think that there's an opportunity with Sofi? I really do. I think that they are just getting started in terms of what they're going to do financially. There's a lot of focus for younger people on their app, and that is just the least important thing they do. Like 83% of what they make comes from their loan portfolio. And Piper says Palantir to the moon. Yeah, I'm less of a believer in Palantir than most people are out there, just because, like I said, I've been involved with, I've been involved in that space periodically, and I know that they have a lot of competition in that space. There's a lot of other companies like C3.ai, like Aterix, and a number of other companies I just can't remember off the top of my head that have a huge slice of that business as well, including some really large players that have snapped up some smaller players in the last couple of years, like IBM, and even companies that you don't think of, like Lockheed Martin and Grumman and Atomic Labs and companies like that. They have their own AI, big data analytics, crunching, the stuff that you guys have probably not heard of because these companies are boring. So, yeah, Dana is 4 times the slide. You better heard them. I think I just mentioned them a few minutes ago. But yeah, so do I think the advantage I think that Palantir has right now is they have a great story. There actually is no confirmation of their whole Osama bin Laden story. I've not gotten anyone to confirm that for me, right? So I don't have any confirmation of that, but it's a great story if it did happen. And so I do think that's a huge advantage, is they do have this sort of mystique around them. And I'll tell you, Alex Karp's hair is a huge advantage. I'm sorry. Everyone loves the slightly unhinged, crazy CEO. Rowan Wood says, what do you think of ChargePoint and the EV charge station network? So this is something that I have addressed a couple of times, and it's never popular when I do. I think that the excitement with ChargePoint and all of the other EV networks is overblown. I think that the competition is going to be destructive in that space because the barrier to entry is so low. There's no technology involved that differentiates one company from another. Meaning, there's basically just plugs and a phone app that manages it, right? And I think that the technology barrier is so low that there's going to be so many people competing in that space in the future that it doesn't matter that ChargePoint is the best-selling, charging thing on Amazon right now. In the future, it could be some company you've never heard of that produces at a lower price, made in China or manufactured in Korea or Vietnam or something like that, just because the barrier to entry in that is just so incredibly low. So let me see here. Say, hey Jason, do you see that how do you see ARK Invest performing this year? Doubtful they'll repeat last year's gains, but according to analysts, we should see a market rally later after this year. So I don't tend to pay too much attention to what other market analysts are saying. I do tend to look at like kind of what industry experts are saying about trends. So I'm really looking at, like I said, not really market analysts, but industry experts. I would agree with you that the funds will probably. I think there's headwinds for ARK funds because a lot of them are tied to semiconductors right now. But their basic thesis hasn't changed. There's nothing that's happened now in the last 3 weeks of market crash or whatever that makes me believe that their basic thesis is incorrect or that it's going to be incorrect within the next decade. The revolution that we find ourselves, the revolution that they have predicted is already happening, folks. It's already here. We're in the middle of it. I talk to people all the time now, who think that EVs are a fad. They're going to go away. And these people don't understand that the price the watt hours per kilogram is very high right now. The energy density is very high. And the price per kilowatt hour is so low that it competes with internal combustion engines right now. And the fact that like the huge draw for me for going EV is that I can drive for free and my power generation is completely democratized because I have solar, right? So I'm free of that entire network. I'm free of that entire oligarchy. I think that draw, that motivation is going to be really powerful for a lot of people to free yourself from the power generation oligarchy. That combined with the lowered price per kilowatt hour of energy storage and the higher energy storage density is pushed us past the tipping point. This is something that's going to happen. So nothing has changed nothing that has happened in the last 3 weeks has changed my opinion on what the kind of moment that we find ourselves in. That's still going to happen. So I think that you are correct, or those analysts are probably correct when they say that this first half of the year is going to be difficult because of headwinds. I say that by a third quarter of this year, probably we'll see the chip industry catch back up to demand, meaning that the queues get shortened and people start getting the parts that they need. And middle of third quarter, by fourth quarter, it's going to be a distant memory. Like the chip shortage is going to be a distant memory at that point. So Demo said, if you're forced to yellow everything into one stock, which one would you pick and why? I'm not going to answer that question. For a couple of reasons. I know that some of my clients are probably watching this, so I'm not going to do that. So thoughts on Affirm. Nadia Omari says thoughts on Affirm. I'm not sure who Affirm is. So let me see here. Oh, sorry, the live went down for a moment. So NEO will not reach 75 before 2 years. I think NEO will definitely reach 75 before 2 years. Nicholas, I just don't think that price targets are all that useful. So I don't invest based on my price target. Like I said before, my holding period for most stocks that I buy is theoretically forever. Crypto mining stocks. I don't know a lot about crypto mining stocks. I would be honest with you, it's something I haven't gotten around to. Please, your thoughts on Square. So people are looking at the fintech space in a much too narrow of a way, right? Somebody's asking me recently, like, which would I buy, SoFi or Square? So I own some Square, and I own a bunch of SoFi. These companies don't really compete with each other. Their business models are completely different. The markets are going after completely different. That fintech space is just completely wide open because there's so much dissatisfaction with the way the financial world works right now. So I do think that Square is going to continue to grow. I don't understand the move that they just made today buying Jay-Z's company, but congratulations to Jay-Z. He's literally And he's an incredible entrepreneur that's been really, really successful over the years. You have to respect GZ's business acumen and his music too. I'm a '90s hip hop guy, so but you got to respect his business acumen as well. The man has made some real power moves, but I don't understand that acquisition. It's less than 1% of their market cap, I think. So I'm not incredibly worried about it. I don't know how much money they could pour into it and lose it, but the other aspects, the point that Cathie Wood made with her assessment of how the Cash App was being adopted, where you can overlay a heat map of the unbanked with an overlay of a heat map of people that are adopting the Cash App, and they pretty much match. They're right on top of each other, right? Because there's this huge underserved market of people that don't necessarily have a bank, but still need to have access to financial transactions, right? So that's how you break into a market, and that's how you start off. When you look at the classic sort of Clay Christensen disruptive innovation, that's how you start, is with that underserved market, right? As the banks have moved further and further upscale, like if you work, I forget what it's called private banking or priority banking for Wells Fargo. If you have more than $250,000 on deposit there, you can treat it like a king. If you have a $500 checking account, you can charge fees left and right, and you probably hate your bank. But I never pay a fee for a bank, ever, never, because I have enough money on deposit there. But I recognize that it's very expensive to be poor here in the U.S. And there's great, because you get charged fees for everything, and there's great dissatisfaction with everything going on in the financial world right now. So I think that every company that is involved in moving money from point A to point B that's attached to a brick and mortar facility and that's related to the old way of doing business, I think they're all in danger at this point. I think they're all in danger. I think that Cathie Wood's thesis that Square will destroy banks, I don't think that it's necessarily going to be Square or Square alone, but I think that we're going to see, I think that 10 years from now, banking will not be recognizable. It's going to be so different than it is today that it's not going to be recognizable. So I have officially not been inside of a bank now for just under a year. And I would maybe go once or twice a year before that, because I hated going to the bank. I don't want to wait in line with everyone else. And bank employees don't actually have the power to do anything. They always have to check with their manager. The manager's always out to lunch. If you go to a Navy Federal, you got to wait 45 minutes every time. So all that stuff is going to go away. We're all moving into this online stuff. So, yeah. Thoughts on 3D? We already covered that. Let me see here. All right. Interesting. Okay, guys, I actually have to execute some trades before market close today. So I am going to call this here. We should, if the market is still down next week, I'm probably going to do another Wednesday live stream. Sorry that I had a little bit of trouble today with the live stream. And who says I love Navy Federal? Oh, horrible, horrible. I hate doing business with them. All right. So, but thank you guys for showing up today. I was really happy to see that there were a lot of people watching. Check out my videos. If you guys want to support my channel, the easiest thing for you to do is actually sit through the advertisements. That's how YouTubers get paid, is when you watch the advertisements. So I know it's annoying, but sit through 30, 40 seconds of an ad before you click skip. And that helps out with the YouTube algorithm and helps YouTubers get paid. So that's one free way that you can help out everyone who likes a YouTube channel. Invest with Jace. He's been on. I've been tracking his channel since the beginning. I think he does great videos. You should check out his channel. He's in the comments. It's called Invest with Jace. Check out his channel and subscribe if you would like. And I'm sure he would really appreciate that. Anyway, thank you very much for attending this live stream. I'm going to end this now, and love you guys. I'll see you next time.